Nestle SA is a Swiss multinational nutrition and health wellness company that engages in the manufacture, supply, and production of prepared dishes and cooking aids, milk-based products, pharmaceuticals and ophthalmic goods, baby foods, cereal, confectionery, and pet care. The company was founded by Henry Nestle in 1866 and is headquartered in Vevey, Switzerland. Nestle operates with subsidiaries in over 127 countries, including the US, that are managed under the Nestle Holding Inc. umbrella. Nestle conducts business in different countries and funds its subsidiaries in various currencies and is therefore exposed to financial risks emanating from the fluctuation in foreign currency exchange rates, as well as translational and transactional risks. Nestle is the largest food company in the world, measured by revenue and other metrics since 2014, employing 328,000 team members in 189 countries worldwide. Nestle has a primary listing on the SIX Swiss exchange and is an element of the Swiss Market Index. It has a secondary listing on Euronext and trades on the New York Stock Exchange. In 2011, Nestle was listed as number 1 on Fortune Global 500 as the world's most profitable corporation with a market capitalization of $304.1 billion as of 2019. The financial year runs from the 1st of January to the 31st of December. As a multinational company, Nestle reports financial data using consolidated financial statements prepared in accordance with IFRS and Swiss law for both the parent company and all subsidiaries. Accounting diversity requires Nestle to navigate, comply, and report using accounting systems in countries worldwide. As a publicly traded company with foreign investors and operations, Nestle faces accounting issues due to differences in currency devaluation. In certain instances, when the foreign currency is converted to the foreign reporting currency, Nestle can go from profiting to losing. Protection against balance sheet exposure requires risk mitigation and hedge accounting. IAS 1 sets the overall requirements for the presentation of financial statements, the guidelines for their structure, and the minimum requirements for their content. This compliance covers the fair presentation in conformity with IFRS, going concern, accrual basis of accounting, offsetting, materiality, and aggregation. Under IAS 1, Nestle prepares its financial statements on the basis of going concern, which is based on the assumption that they will continue operations for the foreseeable future for at least 12 months or more. Nestle presents their comparative information in compliance with IAS 1 standards and incorporates previous periods for all amounts reported in the financial statements in their reports. Nestle clearly identifies and presents the structure of their financial statements that are distinguished from their other published documents, as well as notes for each financial statement, which appear to be in compliance with IAS 1 standards. Nestle presents adequate content of their financial statements in compliance with IAS 1 standards. Nestle prepares their financial statements according to the International Financing Reporting Standards, which are duly issued by the International Accounting Standards Board under the International Federation of Accountants and Swiss law. It has been concluded that Nestle presents their financial statements in a true and fair view in accordance with IFRS and complies with Swiss law. According to Nestle's changes in accounting standards, there were a number of standards that were modified and affected as of January 1, 2019. IFRS 9 for financial instruments. According to Nestle's recent annual report, the class and category their assets are managed and measured by are amortized costs, fair value through comprehensive income, fair value through the income statement. Nestle's liabilities, too, are amortized at cost, but initially recognized at fair value, net of transaction costs incurred. The derivatives of Nestle consist mainly of currency forwards used to manage and minimize exposure to foreign currency exchange. These derivatives are initially recognized at fair value, then remeasured regularly at fair value to account for any gains or losses realized. IFRS 15 was established for the accounting of revenue arising from contracts with customers. It focuses on the identification and satisfaction of obligation to perform. In Nestle's recent annual report, the revenue is recognized when control is transferred from the customer for goods and services and is measured net of pricing allowances, other trade discounts, and price promotions to customers. IFRS 16 for leases. The objective of IFRS 16 is to report information that closely represents lease transactions and provide a basis for users of financial statements to assess the amount, timing, and uncertainty of cash flows arising from leases. Nestle's recent annual report met by the recognition of their assets and liabilities arising from a lease. Nestle leases land and buildings for their office, warehouse, and retail stores. These terms are negotiated on an individual basis and contain a wide range of different terms and conditions. Swiss law allows companies to operate using IFRS or Swiss GAAP due to the similarities in the principle-based true and fair standards. However, the complexities and rigorous requirements of IFRS are not found in the minimum reporting standards of Swiss GAAP. Swiss GAAP is somewhat vague about financial instruments in general. However, Swiss GAAP FER 27 is very specific about derivative instruments. Specifically, as soon as they are deemed an asset, they must be recorded on the balance sheet at actual value. IFRS 15 versus Swiss GAAP FER 22, the establishment of IFRS 15 eases the standard for contracts, allowing alignment for businesses inside the same industries. Even with the simplifications of IFRS 15, the Swiss standard under Swiss GAAP FER 22 is even easier to negotiate. Simply, if preconditions of the contract are met, revenue may be recognized under the percentage of completion method or the completed contract method. Leases under IFRS 16 versus the leases under Swiss GAAP FER 13. The release of IFRS 16 in 2019 requires almost all operational leases to be capitalized and disclosed on the lessee's balance sheet, and this replaces IAS 17. Swiss GAAP FER 13 does not have a strict standard when dealing with leases and allows the business more leeway deciding how to report them. IFRS versus Swiss GAAP reporting, a contrast. With the high quality accounting standards of IFRS comes detailed requirements for reporting accounting treatments on financial statements. The impact of financial instruments, specifically derivatives, affect the financial statement. Derivatives must be used to hedge assets to protect against balance sheet exposure and are adjusted against the balance sheet, while derivatives simply held for speculation purposes must record profits and losses against net income. Like accounting for financial instruments, IFRS has such detailed reporting standards for IFRS 15 customer contracts and IFRS 16 for leases. Concluding recommendations to the Nestle company concerning accounting systems. Although Swiss GAAP is a much less complicated system and harmonizes with much of the EU, the cost of translating to accounting systems in 187 countries which Nestle operates in, is impractical. IFRS is much more complicated than Swiss GAAP with regulations, reporting, and the volume of changes and amendments. However, IFRS allows for harmonization between more countries in Nestle's vast operating sphere.